Let's take a look at some charts on Decred for this week's article on Brave New Coin. So inevitably, people are going to argue with me about Decred not being a Bitcoin code-based fork and Dash not being a proof-of-stake coin. That's fine. Just going to address that, put that in a box to the side for now. To me, Dash and Decred are very similar. They both have treasuries. They're both hybrid proof-of-work, proof-of-stake. They both have privacy features that are optional. So it's always good to compare the two, right? If you're just somebody blind walking into this stuff and you see DCR and Decred, or Decred and Dash, and you're like, which is better, which is different, why is one better than the other? What are the on-chain stats? What are the GitHub commits? Is anybody developing this? Another thing to add to this graph would actually be to look at the governance stuff as far as how many proposals each has, how many votes each proposal's getting, that sort of thing. Like, is the governance actively used and utilized? Is most of it marketing? Which generally, yes, it is. But whatever, that's just something else to consider. So in general, Dash is leading every metric here. Another thing I compare in the article is inflation. So it's all stuff to consider when comparing these two. Now, as a Bitcoin person, I like Decred better than Dash. But hey, that's just me. This is Decred's governance mechanism, polyatia, if I'm saying that right. Polyatia. Anyway, these are the approved proposals over the past, 5 months, 6 months, something like that. I just show these to say that, hey, someone's actually voting on this stuff. People are using the governance. Most of this is marketing, right? Research, marketing, research, marketing, marketing, research, marketing, marketing, research, marketing. So it's not necessarily development, but I think they have a separate pot for that cause. Looking at the DCR ticket prices, which are used for proof of stake, they've essentially flattened out over the past year. So nothing really bullish or bearish to talk about there. I mean, yeah, they'll have their ups and downs, but in general, it's just flat. Demand is flat for those. Hash rate also flat over the past year. Difficulty declining slightly, but mostly flat over the past year. So in general, nothing too crazy from the mining perspective or the proof of stake perspective. Looking at the pool hash rates, it's not great that 2 pools have over 50% and 3 pools have, 60 something percent, 70 something percent. So you'd like to see a little more decentralization than that. You'd like to see more solo miners, really. But my guess is it's just easier for most people to use these pools, or the fees are there. There's always a reason. There's always an incentive for these pools versus, people just solo mining. It's probably just easier to use them. Or these pools alternate between multiple chains or whatever is advantageous for the miner. Looking at the ASICs for DCR, Blake 256 is the algo, and you can see most of them are not in profit. So not great from a proof of work perspective. The Decred's price would have to go up substantially more, I think, for any of these down here to be in profit. Looking at transactions per day and average transaction values, both have come off pretty significantly since July 2018. Transactions per day just continue to decline, basically at all-time lows. Definitely not bullish for any chain. Active addresses, however, are at an all-time high, which I think is because of the coin shuffle stuff that they implemented late last year. NVT here, the line, inverse metric of economic utility, way down at an all-time low. So it's weird that transactions are at an all-time low with addresses and NVT at an all-time bullishness, all-time high for this, all-time low for this. This is what you want to see in a vacuum if you're bullish on a chain. Google Trends basically at all-time low on the floor here. Not something bullish you want to see. Slight uptick recently, but overall, nobody really cares about DCR from a Google search perspective. Looking at technicals, the 50, the 200, yearly pivots, VPVR, and RSI. No bull or bear div on RSI. The USD pair for DCR here is kind of at a key level in that there's a big VPVR node at 16. 50 and the 200 cross might be coming. You can see essentially since mid-2018, it's basically been all bear trend. It's kind of consolidated to the downside. So this 16 to 20 level is pretty big. 28 to 30 is pretty big. Local high. So those are the levels I'd watch for in the next year. We're not seeing this Adam and Eve thing here. We're not seeing mega bear stuff it just looks kind of like a sideways mess until it recaptures 25 really. Cloud actually looks pretty decent. It looks like it wants to break up to the upside. When the price is above cloud, it's bullish. When it's below cloud, it's bearish. When it's in the cloud, it's indeterminate. But overall, it looks like it's flipping bullish here over the next week. And DCR BTC looks pretty bearish, also neutral. And so it's been below the 200 again since mid-2018, below the cloud essentially from the same time period. It's trying to snake its way through the cloud, trying to recapture above the 200, but it's got this massive VPVR node at this level here. So this is going to probably need to reconsolidate for a long time if it's going to retake this level to the upside. Then it's got this yearly pivot, then it's got this VPVR zone, then it's got this yearly pivot. So I really don't see this being above 005 anytime soon. 0025, it's probably going to need 3 to 6 months to consolidate to even get past that level.